So we had the supply that was here turning into demand, and price came into it, and that was a flip zone. So when it came into it, it came in as a stop point, and then when we came in, we went up like this, we broke. We realized that there was a supply that was here. The first time price reacted to it was this green candle. Reacted to it first, then came down, tried to come down, and then it went up. It was able to break through it. Okay. So that is indicating that there was some form of demand that was around this area here. It could have been here safe. It could have been in this place. Way down here. Because now we see that we tapped there, and the one that broke this structure that was around here was this place. So price reacted to it and then came down. So there was another small supply here that price reacted to, and that was the supply that turned to demand that was able to push price through whatever was there. And then we tapped into it, and then we bought. Whatever supply was here again that was pushing price down around here, price was able to push through it. So we now had this almost touching into demand, but did not make it. So it went there. We would have said that is another form of inducement. But the candle we are focusing on is this one, this particular green candle. Because we have already swept, and then we have gone there. And then this candle was the one that this were tapped into, and then we pushed up. So that we don't miss what price is doing, this is the candle. It's the candle. So we had inducement here. Then, do you see the eye that failed to break structure? You see it, this particular eye. So this eye be the first target. Although my target is on the higher time frame, I have a bigger target like this. My target is here. My target is here. This eye. Oh, sorry, not that one. This particular one. Because it's like internal liquidity. Whenever price moves, most times, all it goes to do, what it goes to do mostly is to take out internal liquidity. So if it is going to be a sell, this is the range. This one is the range. Been able to go all the way up here. So most times, whenever price wants to continue a sell, it comes and takes internal liquidity. That is the liquidity. Sometimes it occurs before price comes and takes out the low. Like in this case, let me illustrate. Like in this case now, you see that price came all the way down here, went like this, and then did this. So we are now coming like this. So first thing I want to see price do is take out this one. Maybe do like this. And if it wants to continue, we go up like that and take out the eye. But this is the one that I expect to see price take first. So that's where my target is. Target is. But first of all, we are coming for this one. Because this one has some liquidity upon it. See all of the China liquidity there. Same time is the high that failed to break structure to the downside. Nothing from it. So we are currently in discounts. So that much is obvious. We are currently in discounts. So now we've had price. After breaking through all of this and creating inducement, you see why inducement is different from engineer liquidity? Do you still get it? This is inducement. If we are going to have engineer liquidity will be coming around here. But this is the leg that started the move. And so we had this one try to touch into the demand and fail. And then we went up. So we see price now come down and probably take this one into the demand. But if it was that price just went up like this, without anything, and so it now comes like this and does this, and then now comes back here, then this is engineered liquidity, not inducement. It is now engineered. So price now come into it and pick up and go up. So if it does not come on this particular leg, long as it's not here, then it's engineered liquidity. So if it is on this leg, then it is inducement. So the inducement comes when we see price go up like this, and then it tries to come down and then goes up again. So inducement is just to deceive people. Some people will think that, oh, price has started going up, it's bullish. Okay, let us buy, let's place our money there, let's place our money there. They will now put their SL here. So they've seen price move up here, and then price now comes down. It will now pretend like as if it has taken an order. And so they will just place their entry here, somewhere here, place their SL here, and then when price goes up, it goes up to buy. Of course, it will go up to buy. So some people might be lucky if they put their TP here, they will TP and get out. But most people will feel like, oh wow, price has already started to move. Let's hold. And now they will now become the liquidity, which is inducement here. So inducement is just to induce, maybe to deceive somebody into doing something. So that's what inducement does. And it's usually on the main leg. So when it now comes here, when it comes here now, this one will be looking like a pullback. If it is an engineered liquidity, to be looking like a pullback and price wants to go up there. But we know that the demand is here. The demand has not been touched. An heavy order is waiting here. And so we want to wait and see the heavy order occur, being picked before we actually go up. And so that's the logic behind it. So by the time we come, so price comes into that, and then we start to move. Let me see. I don't want to draw this so that we can be able to see if there are any entries on the way. So we tap into this. After we've tapped, we have reacted a little bit, then another reaction. And now you see that after price tapped into it, it came here, swept this liquidity, swept this high as liquidity. And so we see that this particular areas had already tapped into this leg that tapped into demand. And so we have this area ready. I think the next session I'll teach you POI so that I can be able to identify the right POI. You need the session. Or should we even do it today? Yes, 12:24. Okay. But already now I've shown you this. You saw the reason why we picked this as our demand. I was thinking. Okay, ask a question. Yeah. Okay. So one thing that you should note before you pick a POI, most important is you should have your market structure verified first. So when you verify your market structure that okay, price has begun to reverse. Like here now, price swept here, came all the way down here. We would have expected that price continue to sell, but it came up here and took out this high. So we saw all of the upward movement begin to happen. And so in that kind of case, we should know that okay, price is planning to buy. So after we've gone up like that and then we tap into here, we've confirmed that okay, price was previously bullish, bought here, and then started to come back here. So this one is more like a pullback. Okay, this is more like a pullback. So the continuation is now what you want to follow. Because why? Price has been bullish. That's just a push. This one is a push. Come. This one is a push. It's a pullback. And now we expect to see a push. So that's what we've had so far. Whatever leg was here has already exhausted itself when price took this out and broke structure upside. So this one has already been taken out. We've already broken structure to the downside, or let's say grab liquidity that was here. And then we broke structure to the upside. So we now have a new structure. And that's why we had that push, a pullback. And so now we want to follow the next push. So now we now want to pick a POI. So let's say that, let me start over. Start over. So now you see that price has swept liquidity, came all the way down here. We're taking this out. And then we now see all of this battle occurring here. So all of this that is occurring here is telling us that okay, there was a supply here because some people are thinking of buying around this area. Okay, they were thinking of buying around this area, and they were reacting to something. And what was the something they were reacting to? They were reacting to a supply here. You see all of the avoidance. Yes. The way you confirm that some people are trying to buy, there is all of this BSL. You see that? You still remember BSL? Yes, back then. Yeah. And I said that it is when people are trying to buy and they are failing. Yeah. So you see all of this happening here. So that means this candle was the one they were reacting to. And why are they reacting to it? Because this candle already came, swept the eye of this red candle, and tapped into the supply that was here. Because every red candle that is as heavy as this is carrying supply. In fact, every red candle, every sell candle carries some form of supply. The question is just how much supply does it carry? Is this supply enough to send price down, or supply that is not enough to send price down? That is always the question. And so price came, he saw that this one didn't have enough supply, and so he swept it and came into this one. So they were able to find supply here. The people who are buying now knew. The people who are buying. So this candle could not stop them. But this candle was able to stop them because there was enough supply for price to send for sellers to sell price. So when we came down, we saw all of this reaction, all of this BSL. Okay. So when that one happened, we know that okay, definitely there is transferred supply here on this candle. This candle. I like to use candles as my POI whenever I work with POIs. So we've had that one happen, and as price did that, we saw that we began to have more transferred supply. This candle tapped into this candle. This candle tapped into it and came down. This candle came here, swept this one's eye into this place. And so now, this candle that was the green candle now became the new supply. And so this candle tapped into it, this candle tapped into it, swept this one side, tapped into it, and then we sold all the way down. So we now know that okay, this is now the original transferred supply. Because why? It broke structure to the downside. It's the one that now broke the structure to the downside. Okay. So by the time price comes back, we should expect that price should react from this candle. Okay. So this one was the one that swept. It swept liquidity here, came down here. This one kind of tapped into it and then it came down. So the reason why I'm picking this area is because of the fact that the one that swept the liquidity, where we had the rejection, is here. So somebody had their volume rejected here and it came down here and then we came down here. Okay. So we came into this. I like to use week a lot because experience has taught me that usually most times the week is the one holding the volume. Most times. Especially when we've mitigated this area. If this area is being protected, this body area is being protected, then we will know that okay, we can pick from the week to the body. So that anyone that price is going to use, price will use it. And that's why. So when we came here, we tapped into it and then we started to sell down. So if we were thinking of price coming to take out this low, we said we wanted to sell down and take out that low, then that could be a good opportunity to do that. You remember why I picked it as a POI for the sale?
Yes, because the start into that cash was the previous supply.
Yeah. And do you remember the second one? Are you there?
I'm not sure, sir.
Okay. So this candle was the one that was holding the major supply. Then when after that price began to react around it. And the reaction is what we had already found out. So what we will now be looking for is to see how price is going to react to this candle. See that this one, it touches into it, this red candle here, it touched into it and sold down. Some demand came, pushed it up again.
Upward.
And then this one now opened, then touched into this one, and then came down here. We still have liquidity in all of these places. And then the next candle opened. This one sold down, swept liquidity, went up here, swept more liquidity upward, and then now came down. So most times, an opposite candle that closes, maybe in this situation now, this one closed bullish. Most times, those kind of candles, they can serve as reference point for price to sell from. So now see what happened there. This candle closed bullish. And then the next candle that opened tapped into it and then closed like this. It didn't go down to take the low. And then we had the next one open and now take out this eye into this very candle and then sold that and broke structure. The one that breaks structure, that cause structure to be broken, is going to become the reference because it is now the one that had enough volume to be able to break structure. And why do I say that it broke structure? Because why? All of this one that have been happening, there was some liquidity here, all of this one. Something was reacting from here. You see that price was reacting from something here. There was a demand around here. And price was able to come down, clear everything, and see all of the long wicks. Because why? There was nothing around here again, either before. There was nothing here before, except these guys. So when price came, it just took everything out and then started to reverse back. So it took out whatever structure was there because whatever structure we had now was this high to this low initially. You see that?
Yes.
This high that was holding what's this? This high that was holding the cell phone. Hmm? You see that? This was the structure. So when price came and took it out, then that means we had a break of structure. So the next uh, the next POI now will be this I to this, because this was the one that was carrying a supply, and then this one reacted from it, and then we broke to the downside. So if we are to now talk about, okay, which candle caused the break of structure, gone. Whenever we see a sweep, okay, we saw a sweep here. Price swept liquidity before it broke it. That makes this candle valid. If it did not sweep liquidity before we broke structure, then we might be considering this one. But for the fact that this one was the one that swept the liquidity here before it
That
broke
is the
structure,
liquidity.
that
Yeah.
makes this one a valid POI. Because why? It was able to sweep liquidity.
And
And
that liquidity is that red candle there. That's
yes, this one here, that was the liquidity that it swept. And what is the sentimental analysis behind price sweeping liquidity? It is simply that, okay, people try to buy here, and then they met supply sold it down. People try to buy here again, and then they met supply again, and it sold it down. Then this one now came out and took out whatever these ones were holding. Okay, whatever supply, whatever any small time supply that was here, that was able to push price from this particular point all the way down. This one came here, took it out, and then was able to break structure. So whatever order that seems to have been there, because there was an order that sold price down to this level. This one now came here, took out that order, probably the SL of the order, no matter how small, and then came down, and they were able to break out and break structure down there. You get it?
yes. Can't we say that's a little indifferent?
You see?
Can't we say that's also a little indifferent?
We wouldn't have known that it was inducement. And you know why? Because of the fact that this was the one that was carrying volume. This area was the one that was carrying volume. So when this one tapped into it, we can't confirm that it's inducement yet. So the only way we can know inducement is, okay, when we see that price was attempting to go to a particular supply that we've identified, and it has refused to go there, and it now continued downward or something, then we can now say that that's inducement. But since it didn't, we can't really say that it's inducement. So this one tapped. Normally, if you were to ask me and price was here, and price was here, I would have said that, okay, price has already tapped into demand, into supply there. I would have said that price has already tapped into supply. Because why? Tap this candle. This one swept this one's liquidity. And then it came down here. So next thing I would have expected is, okay, oh, price should tap into this one and then sell down. But you now see that the next thing that I did was create another candle. And that one now swept the liquidity here. So, and after it swept that liquidity, it was able to go down and break the structure here. So that is why we had to use this candle. Or more precisely, to use the wick of this candle as supply. If you go on lower time frame, you see that that particular area that we marked out could also be a single candle. See, this one reacted here, swept this one tapped into it, and then we had all of this BSL here, and eventually they were able to come down, sweep liquidity there, and then they now came down. So the supply that was able to take out all of the demand that was in this area is very much worth it. So it becomes the sell supply, becomes the supply candle. You get?
Yes, sir.
I'm a bad explainer in terms of some things. So
That's
maybe I'll find the material for you that will show you how to identify POI in depth. But some of these things, and some of the things I know, they are from personal experience. So I've been able to see what price has done in some certain areas over and over and over the years. I've been able to identify that okay, this is it. But I'll send you a material that you used to understand better. So price has swept this and came down, and you see what it did first. Now this was looking like a sweep of liquidity. Okay? By the time it created the next candle, started to go back up. It now became our own break of structure. That aspect has already broken and it's coming up. And people ask sometimes, they say that what's the difference between stop hunt and break of structure? That question is complicated, to be sincere. Because if you look at this now, you think that this is a stop hunt. It's just terminology. We've been able to take all of these lows, every low now, we were able to come here and take it out. That's a break of structure. And we had a structure that started from here and came here. So we were able to come here, take it out. Now we are going to touch into the one that caused supply. So anyway, it's usually best when you look at higher sorry, major structure. Like that one that I bought from. Like that one that I bought from. That's a major structure. When you see inducements, usually best when you pick your entry from the demand that comes around there. So let's say, okay, this is 5 hour. So come here and sweep that low. Now we are now waiting for what price we will do. Now, initially before I might not have seen this. I might not have seen this one that was the supply and that became demand. Okay. So now we just see what price we do after that. Because now this is the objective that price was going for. In this case now, this low has failed to break structure to the upside. So we should come and take it. But you know, there's a question that I know that possibly people might ask me and be like, "Ah, how would I know that price would have come for this low since we have not even, we have not even gone into this place first?" But already we have seen what price was doing here, and we knew that price had a supply here. So by the time we go there, it is just to come down and take the liquidity that was there. So that is just the explanation. So let's see what price did later. Okay, so we come into that. After we came into that, to the demand that was there, deep zone. See all of this reaction. Price began to react around here. Are you seeing this? You see that first time price came into this, then it came, but then it now sold into the same area, and then we touched into this. We touched into the supply that was in this candle, and then we now came and broke. So you could say that this too was also this a form of supply, if you ask me. This particular candle, because now it has mitigated the supply that this candle was holding and broke structure. The only way we knew that it has mitigated it successfully is the fact that it took out these lows, these two lows. Because this one wanted to form demand before. But by the time this candle came into the situation, you see now, by the time the next candle came into the situation, the story changed. Because they wanted to buy from here. Price came down here, tapped into one kind of demand. They wanted to continue selling and they bought. So buyers bought. So when they bought, you can see that the next candle that opened, it tapped into it again. This was where it closed into the same candle. Started the buy. So by the time the next one came, you see that it took it out immediately. It took out whatever demand that they were holding on to, that they were having their hopes in. So it took it out. And then from there, We mitigated it, and then we sold them into where the demand was. But this is where the situation occurred. That is why we are putting like if you want to have further confirmation of the supply that was there. This is how you know it. We were reacting to
Yes,
still the
that's
same zone. The first can do, this can do, the next can do, this can do, this can't do again. This same zone, man. And by the time the next candle opened, it broke through whatever supply they were holding. So, as regards supply demand flip, we might be looking to see what will happen around that zone. And by the time price goes, you see that this volume was enough to take out every form of supply that price was holding along here. Then
yes, sir.
come here, we do this, we move from here. You see all of the whatever supply that this one was holding. You see, we've already destroyed it.
Yes,
So
yeah.
this candle now doesn't hold anymore. So the one that might now pretend to hold or that might now hold is this one that was the originator of the whole crisis. Or is the one that sent this one down, that was holding the supply, that sent this one down. Because this particular candle was not holding enough supply. And so they were able to bully it and get over it. So it was now this one that now became the reference for price. And price touched it and sold down, and all of this happened. So now it is still now the same supply that is now, pushing price down
Getting back
again.
down.
So we are now reacting from it again. So this particular zone now, we'll have said that okay, let us use this one as our area of entry or something like that, or see whether price reacts from it again. But now you begin to see that when price came down, it came down here and then it came down into it. So that means there was a demand that pushed price like this, and I now made this one react from here. That is, that made this red candle react from this place. You see that? A wick is the part of a body's of a candle's body of a candle's composition. So as long as that wick is still there and we have the body, that means that that candle is a valid candle. So we had this one react from here, okay? And then next thing we should see is to expect maybe price will be able to respect this place as demand. Since this one reacted from it and this one picked up from it to go up. Okay. But by the time price came back, it came and swept it again, swept the demand that was there again. And there was now another demand. So that means that we are now having succeeding demands at this zone. So that is important to note. I'm a person who studies candles. I was speaking to somebody just like some 30 minutes ago or so. And she was like, she said, so I study candles. Yes, I study candles. If God can show me how to study candle by candle, then why would I not make use of it? Because it's also useful and it works. I showed her what I showed you the other day. That's the study that I conducted when I was studying candles by candle. And I showed her, I said, this is what I did. Then this was what I was doing. This was what I was seeing. And it has helped me a lot because we cannot have all of this structure and everything if there were no candles.
That's true.
The candle is the cell.
Exactly.
Is the cell, and they say that the cell is the smallest unit of the body. It's the cell that
Yeah, that's
that makes the composition of everything, from cell to tissue, from tissue to system, and all of that. So the candle is the cell that makes up the whole system. So from there, you can see that we are reacting to something from here. And do you know why we were reacting to here? Do you know why?
I can see that there was already there's a supply there.
Yeah.
There's a supply there. That place that the left and that
This one.
beginning of the zone at the left hand, that place.
Yeah.
That's a supply. But that's a supply. That's a supply.
Yeah. So that is why we were reacting from, because we had a supply here. This one was the one that broke this one. It was the one that broke it. So it was this candle that this one tapped into to be able to break it. So we now saw that price was reacting to it. And the reason why I picked this one was because of this is where the reaction was. This is where the reaction was. And this is the candle that initiated it. And we didn't even really mitigate it before it happened. You see now, this candle did not mitigate this one before it sold down. And so that means we have an unmitigated supply. And when we have unmitigated supply, most times that kind of supply can be very, very powerful, especially when price breaks through it and it now becomes demand. So we did not mitigate it. And when price broke through, you see that it now started to react from it. And so this particular demand that we now have here, we can just hide it because right now it's not useful. And so we see that price reacted from there, and then we bought. After we bought, we had a little touch to try and touch into this one. This this demand here. I like to use body whenever I'm picking demand area sometimes. I like to use the body because you see that price reacted from the body and then pushed up. So we had this one try to touch into it and then we bought. Okay, but so after buying, whenever you see something looking like steps like this, that means the demand that was in that area was beginning to weaken.
Yes.
And when it finished weakening, you see that price came and touched into this kind. So that was the one that started. So all of this one now became weak. So price now came tapped into this and then started to go up. So this was the one that didn't touch into the real demand because this one was the one that tapped into uh the unmitigated supply slash demand now. So we still have to come back here. So we now have this as inducements. Okay. Are you understanding it so far?
Yes, sir. That's one.
So this one is now inducements. Now we now have this zone as our demand. Whenever you get to the chart and you are seeing this real time, sometimes you might not even think too deeply or too much about it. So the market requires fast action sometimes. And so when I saw it, I knew that okay, we had the demand around here. And that's why I just picked this candle itself. So let's see if price was going to come into the zone that I marked. So that one was inducement. And so now we expect that price should be able to come, sweep this inducement into the real demand, and then it can now continue. So there we go. When there we came down, we had all of the sweep. You see that price attempted again to use this place as demand. But you see that it will fail. Because now this is the result of price tapping into here. This one now became some form of demand and it went up here. And now it came here and tried to react. And then it touched into that zone. So that's why I usually like to use candles,
Full candle.
a full candle. So I had to use it. So it tapped into it. There was another tap, and then this one came and tapped into it again because the people who are selling from here, They didn't want to care about the fact that okay, there was a demand here. All they wanted to do is just continue the sell. But they came the first time, they got ejected. They attempted again the second time, and then they attempted the third time because now we didn't take out this eye. So they attempted again the third time, and this time around, they were very much ready for them. So the next candle or the next candles took out that. So you can see that we took out this eye, this particular eye here.
Yes.
We were able to take it out because it was the one that first rejected from this one's supply. All of these gathering brethren that gathered together now came down here and price went here. It would have looked like as if price was going to take out this eye just because of the fact that it did not break the structure to the downside or that it did not go downward. Oh my god, battery is low. So just that it did not break structure to the downside. So instead it went here, tapped into this supply and came down. The reason why we know that there was supply here is because of all of this rejection, yeah. So that is how we know that we had supply there. And so when price came, the next time after tapping into the real demand, saw that all of this continuation happened and then we were able to take out DI. And now this one that was responsible for taking out DI now became the area of interest. This candle. Okay. And so this candle was able to come here, take out the eyes that were here. And then later they sold again. They sold and took out the liquidity. And they now came into the candle, the same week candle that was holding demand. So we came back into there. And so now we'll be waiting to see, okay, has price fully mitigated this one or not? That will now be the question on our mind. And now we see that, okay, price now comes here, whatever supply that was around here, it took it out. And so we know that, okay, now we are serious, ready for business. Because why? This major supply has been taken. So we should now expect that, okay, price should come back, pick a zone for continuation. What is the zone we are looking at? This one. It's quite big, but what do we have to say? We had a bigger one here. We came with tapped into this and then we went up and broke structure. So this candle was one that was responsible for breaking the supply and whatever structure seems to have been there. So that could be a second entry if we want to. Okay. Look like price even touch it. Why not touch it? Let's not touch it. That would have been a missed entry. So this is what price did here. This is what price did here. It tapped into this and then went up here and took the whatever. So when price came back later, use this candle as demand. So when price went up, it came back in again, tapped into the demand. Can't really see a previous demand or supply that was here that price broke. That was why it was difficult to find the entry here precisely. Someone give me a slowdown, some bought here, someone tapped into it, went up there. So unless we went on lower time frame, maybe we could find what exactly happened there. Okay, we had some supply that was here. This one was the one that broke it. Oh yeah, that's true. So this candle became the reference. That was why. So price came into it. Now price came into it again and then tapped here. So that's why we had that. And so from there, price continued and went up and went up and went up. Let me just take it to 10 times. Because I think we had to end the session here. The system is down. So went up, went up.
Oh my God. It's going.
Here's 45 minutes. Go faster. fix this other
Assuming somebody